Hello. What's going on, everybody? Welcome to Stock Trades. How's everybody doing today? What's going on? All right, ladies and gentlemen, we have a lot to talk about in today's video. Lots of great things to discuss. Let's go ahead and start from somewhere. First things first, happy pre-Friday to all of you guys. Tomorrow, the stock market is closed for a Good Friday holiday. Happy Easter to all of you. Al, the legend, the hero, the man, the Al Stock Trades platform. What's going on? Pepe for a lifetime. What's going on, everybody? All right, so a couple things that we need to discuss. So like the title says, UnitedHealth is on track for the biggest one-day sell-off since 1998. Look at this. Look at this huge sell-off. Huge. This is huge. 24.62%. Okay? Now, before we get into all the other things we're going to talk about, we're going to go ahead and we're going to essentially analyze what has happened in regards to the earnings. I broke it down in an easy-to-read, digestible format that I would normally release to the Research Edge platform, but I decided, given this historic event, to go ahead and talk about it in today's video, right? The big thing here is if you go ahead and take a look at Humana, and shout out to Belize, right? Shout out to Belize, but, Humana also dropped on the news, but, I don't think the stock market's quite looking at this right now because you may not know this, but the CMS, Trump's CMS, rejects Humana's Medicare Advantage star ratings appeal. This is a big thing, right? But we're still not out of the woods yet. This was published April 16 by good old Rebecca. Rebecca, I love you, okay? So, the decision, which Humana disclosed in Tuesday, filing with the court overseeing its lawsuit against HHS, will be reviewed by Dr. Oz, the new CMS administrator. So we're not out of the woods yet. Do you remember the video that I talked about the disruption curve for Clover Health? The fact that they increased the overall effective rate of Medicare Advantage to 9%. In my original bearish view, I said that, this might disrupt because Clover didn't need that raise. Humana did. UnitedHealth, they desperately needed that raise, but Clover does not because they have the Clover Assistant that reduces medical cost. Now, what I was afraid of is if this administration is trying to give out handouts to the rich, which, of course, politicians lie, I was afraid that potentially CMS, which is now controlled by the Donald Trump administration, could get a lifeline to Humana regarding the star ratings. I was very scared of this. So this is a big deal because where's the date? Where's the date? What is the date? Let me see here. Mr. Oz. There it is. The CMS decision is subject to review by the new CMS administrator, Dr. Oz, before it becomes final on April 28th. Now, again, this scares me. You remember when you were a child, when you learned about lobbyists that lobby against the best interest of the United States citizens? Well, Humana has lobbyists now lobbying Dr. Oz. And we're going to see right now, is this administration going to do the right thing? Are they going to not increase their star ratings? Because if they do, then if I was Andrew Toy, I would say, give me those 4 damn stars and give me those 4.5 stars, okay? So let's say if Dr. Oz does the same thing, I recommend being vocal to your representatives, right? So this becomes final on April 28th. So we have right now, ladies and gentlemen, 11 days. 11 days for Judgment Day for Humana. The reason why this is important, because if they do not get the star rate increase, they are going to lose billions of dollars, okay? So we're going to go ahead and watch this, right? I know this is not the biggest news of the day, but it was published today, and it is important because Humana has a lot of Medicare Advantage folks, and if they can't afford them, then they will dispose of them, sadly. And who is going to take care of those people? It's going to be the disruptors. It's going to be Clover Health. This is disruption, okay? Now, let's go ahead and let's analyze this. United Healthcare is on track for the biggest one-day sell-off in 1998. So, Medicare Advantage utilization shock. Twice the expected care activity in Q1. All in seniors. Outpatient and physicians visits spiked. Inpatient rose to a lesser extent. Group MA premium whiplash. Employers and municipalities passed the CMS funding cuts on the retirees' premiums up to 300 to 400%. They passed on those cuts, sadly. So what did members do? They rushed to use the benefits they now pay more for, a behavior that United Healthcare underestimated, which is good. Take care of your health. Don't let these people take advantage of you. Seasonality unknowns. Management assumes that the Q1 spike persists all year and in 2026. So this disruption is going to continue even for the big dog, United Healthcare, okay? Because they, by the way, this is UNH, right? Because remember, we're switching now. We're going to talk about UNH, biggest drop, right? Because they cannot yet parse the seasonal catch-up from structural demand. If they're wrong in either direction, further guidance is again at risk. Optum Health, risk score haircut regarding the CMS V28 model phase is carving out 9% out of MA risk payments. Plan exit refugees, okay? Execution lapse. The biggest thing that I want to talk about, though, is margin compression and guidance reset. The medical care ratio, medical cost ratio, right, is now 87.5%, plus or minus 50 basis points. It is up 250 basis points, aka up 2.5%. Ladies and gentlemen, Clover Health, Clover Assistant, now with its SaaS counterpart, advertises a drop of more than 1,000 basis points, when in reality, United Healthcare is increasing by 250 basis points. The big thing that was a sledgehammer to United is their former earnings per share was $29.50 to $30. Now it dropped significantly to $26 to $26.50. Only half of earners will arrive in 1H25. Unheard of seasonality for United Healthcare. Leverage on fixed costs, right? The credibility and regulatory optics. Investors thought the 2024 utilization spike was a post-COVID one-off phenomenon. Being surprised again erodes the faith in United's data advantage. DOJ has already probed MA risk adjustment industry-wide. Another year of outlier trend keeps the spotlight on coding practices. Pricing power returns in 2026. CMS's preliminary 2026 rate notice finally recognizes higher medical trends, giving MA plans a bigger base to work with, which I don't agree with. Let them burn to hell, but it's fine. Just as long as they don't give a bailout to Humana on their star ratings by April 27th. United will bake double-digit until cost assumptions into bid, widen benefit differentials, and this is the big one, below low-risk and high-risk groups, and it'll push more cost onto the high-rich group plans. This is not healthcare, right? They're just shifting costs around. They're like, okay, rich people, you will pay for the poor people, and that's how we're going to be able to make money. Just charge the people, right? Tax the rich, right? That's their freaking plan. When in reality, not taking a first principles approach and actually breaking down why the costs are going up and creating a software like what Andrew Toy did regarding the Clover Assistant. This is called a technological moat that Andrew Toy is developing. Okay. significant investment in physician EMR embedded point of care tools, right? What else? So what it means for the wider healthcare landscape: sector repricing. Every large cap MA carrier sold off in sympathy. Payers will submit 2026 bids with higher trend, leading to richer benchmarks and potential higher taxpayer cost. Let me pause. If you don't recall, yesterday, the chairman of the Federal Reserve spoke, and he strategically said something that I would like to share with you all. Let's listen.
What are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now we're running very large deficits at full employment, and this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can say from my time working on these issues, it's not the Fed's.
Are you ready? It's not the Fed's issue. This is what he's going to say. The biggest spenders in the U.S. economy. Are you ready? He's about to spill the beans.
Issue, but if you look at the pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments.
Medicare and Medicaid, ladies and gentlemen. Medicare and Medicaid. Medicare and Medicaid, right? And what is Andrew Toy doing? The biggest spenders are Medicare and Medicaid. And when Andrew Toy has a solution, this can drastically cause the Clover Health stock price to go up $100 billion. Do you understand this? The fact that if it can truly save 1,000 basis points, and the fact that over 10,000 Americans turn 65 every day. Yesterday, another 10,000 turned 65. Today, another 10,000 turned 65. And tomorrow, another 10,000 will turn 65. The fact that Clover Health has a solution, and the fact that we're able to buy the solution at book value prices when they were essentially being sold for pennies, we will be the winners. We will be the winners. And once Clover will get to its intrinsic value, many people and naysayers that talked crap, just like they talked crap about Palantir when it was $6.50, when these so-called gurus that think they know about the stock market were talking about this, now they look at Palantir and they bow down before the great presence of Alex Karp. Just wait. Wait until Clover Health reaches its intrinsic value, and all those people on Twitter that act like financial gurus with 100 and 400,000 followers, they're going to be talking about Clover, right? Talking about how great it is, while we're going to be sitting at the top, being able to do the wheel strategy, making $500,000 to over $1 million a month. That is winning. That is winning, right? So big thing here, right? Provider leverages rise. Seniors are clearly willing or compelled to consume more outpatient care. Capitated groups that manage it well can demand better economics. Disruptor window. Clover Health just printed 73.5% Q4 2024 MCRs, medical cost ratios, and expects 2025 profitability with tech-driven care coordination. Smaller data native MA plans may gain share while legacy giants have to recalibrate. Here's the bottom line, ladies and gentlemen. Here's the bottom line. UnitedHealthcare stumble is the most self-inflicted timing and execution on top of an unavoidable reimbursement reset. The franchise isn't broken, but the margin profile investors grew accustomed to 15+% EPS with the CAGR of low 80s MCR is gone until 2026 at the earliest. Watch utilization trends and Optum Health risk scores catch up through this year's back half. If they stabilize, today's capitulation could mark a long-term entry point for folks that want to buy the dip on UnitedHealthcare. But if not, the Medicare Advantage landscape is primed for nimbler challengers to chip away at the incumbents moat of Clover Health, right? I believe that Clover will be able to chip at this incumbents moat and be able to leverage its data softwares to allow these big insurance companies to where they have to sign a deal with Clover Health. They have to. Okay? This is a very big deal. And you know what? It's fine. We don't have a lot of subscribers. That's okay. All right? Warren, I'm not calling myself a Warren Buffett, but you cannot follow the masses. If you follow the masses, you will lose, right? You have to learn to not follow the masses. Guess what everyone's saying now? Let me show you. This is what happens when you follow the masses. Give me a moment. Let me show you the masses. Let me scroll up. Look at the masses. Look at the masses. Wow. I can't believe it. United Healthcare is dropping. Wow. This guy has 577,000 followers. Okay. All right. Let's go here. Let's look at another person. Wow. Look at this guy. Woof. Has 410 followers, right? These people are supposed to be investment research, building your wealth, right? Goldman Sachs analyst. Get out of here. Get out of here, right? Get out of here, right? You and your following, get out of here, right? You have no idea what the hell intrinsic value is. You have no idea how to pick stocks. I've been in the game for over 10 years, right? I know exactly what I'm doing. And when I take a shot, we take it right. And I'm telling you right now, if the CMS rejects Humana, then that means we are going to eat Humana alive. Clover Health will disrupt Humana, and all of that market cap is going to get flown into, just like from Intel to AMD, right? Just like BlackBerry to Apple, Blockbuster to Netflix, taxis to Uber, Marriott to Airbnb. This disruption is real, and we are getting closer than ever. Today is Clover's first year of fiscal free cash flow positivity. Ladies and gentlemen, you have no idea. If this is able to be playing out, then in the next 2 years, you are going to see something that you have not seen before. You're going to realize the power of the Al Stock Trades platform, the power of calculating intrinsic value, the power of being able to take someone from homelessness to a mega multimillionaire. You guys will see it play out in real time. That's all I have to say, right? I appreciate you all for watching the video, and I'm waiting. I am just waiting for all this to play out. And to all the naysayers out there, they will all shut their mouths. All of them. I'll see you on the next one.